Welcome to the Deep Dive. We're here to cut through the noise and get straight to what really matters in this fast-moving world of Web3. Have you ever thought, is there a better way? A way to trade stocks, get loans, maybe even invent new financial stuff without all the slow, costly, kind of confusing old systems? Or maybe you've tried some of the early crypto platforms and found them, well, a bit clunky, expensive, maybe even frustrating. Today, we're looking at a project built precisely to tackle these kinds of challenges.
Yeah, today our deep dive is focused squarely on Injective. You'll often hear it called by its token ticker INJ. So what is it? At its heart, Injective is a specialized Layer 1 blockchain, high performance, built basically from the ground up specifically for sophisticated financial applications in, the Web3 space. Our mission today, to really unpack how Injective sees the future, how it aims to build a financial system that's more inclusive, more free, and truly decentralized. We've gone through a whole stack of quite comprehensive reports, detailed research, pulled out the key nuggets, really. The goal is to give you a super clear picture of its potential, its unique aspects, and, the challenges it still faces.
Okay, let's definitely unpack this. Because when I hear finance, my mind immediately jumps to, well, complex, slow, expensive. That applies to my bank, sure, but also some of those earlier crypto exchanges I've used. So what specific problems, like real-world headaches, is Injective trying to fix, both in the old traditional finance world and in those early DeFi days?
That's really the crucial starting point. If you look at traditional finance, TradFi, it's just, full of systemic issues. You've got centralization, right? A few big players controlling everything. That means high barriers to entry for regular people, even smaller firms. There's often a real lack of transparency in how things work behind the scenes. And of course, those fees. Hefty fees for pretty much everything. Think of it like, I don't know, a super exclusive country club, really high membership costs, lots of gatekeepers. It's often set up to benefit the insiders, not necessarily everyone else.
Right. And early crypto tried to fix that, promising decentralization. But it wasn't perfect right away, was it? It had its own set of problems.
Exactly. That first wave of decentralized exchanges, the early DBX, they definitely had significant drawbacks too. Performance was often low, slow trades. And those gas fees, especially on networks like Ethereum, they could be incredibly high, super unpredictable, made frequent trading really expensive. Plus, you had fragmented liquidity, meaning money was spread thin across different platforms, making it harder to get a good price. And honestly, the user experience was often clunky, pretty intimidating for newcomers.
But beyond just being slow or expensive, there was this other issue, something almost unfair, that really affected users, right?
Yes, absolutely. A really critical and frankly frustrating problem in early DeFi was something called front running. It's a form of MEV, or miner extractable value. Basically, imagine you place an order online for something popular. Someone with, say, faster connections or inside info sees your order coming. They quickly place their own order just milliseconds before yours hits, maybe grab the item, maybe even drive up the price you end up paying. In crypto, this meant bots, or even the miners processing transactions, could see your pending trade, slip their own trade in first at a better price, and profit directly at your expense. Just by manipulating the order things happened in, Injective was built literally from the ground up to tackle these core problems head on, aiming for a system that's not just efficient and open, but genuinely fair.
Okay, so if that's the problem, the inefficiencies, the unfairness, what's Injective's big idea? What's their vision for a better financial future?
Their mission is ambitious, no doubt. They talk about reimagining the future of global markets and creating true financial freedom for all. The core aim is building a more free and inclusive financial system. To give you a simple analogy, imagine a global stock exchange, super modern, super fast, open 24/7 to everyone, everywhere. No hidden fees, no middlemen taking a cut. It's so fast, trades feel instant, and it has special built-in rules, guarantees almost, that nobody can cheat or get an unfair leg up. And crucially, it's not just for trading. It's more like a foundation, a base layer where completely new financial apps, lending, insurance, you name it, can be built and used by anyone, connecting, really bridging that old financial world with this new decentralized one.
Wow. Okay, so it sounds like much more than just one exchange. It's aiming to be like an entire financial infrastructure, a new foundation.
Precisely. The bigger picture for Injective is really to become the fundamental Layer 1 blockchain for the entire financial industry, like a unified layer for finance. That means it's designed to support a whole ecosystem of interconnected DApps, decentralized applications. This includes things like tokenized real-world assets, so digital versions of stocks, currencies, maybe even commodities, all living and trading on the blockchain. It's about providing that core infrastructure, empowering innovation, letting new kinds of financial services bloom on top. It's like building a global financial nervous system.
That sounds genuinely transformative. But, okay, how does it actually do all this? For someone like me, maybe not super technical, can you break down the mechanics simply? How does the engine work?
Definitely, let's simplify the engine. So step one, the foundation. Injective is its own layer 1 blockchain. That means it's a standalone network, not built on top of another like Ethereum. What's really key here is it's built using the Cosmos SDK. Now, that's not just a technical detail, it's a strategic choice. It lets Injective be purpose-built, highly optimized specifically for financial Web3 apps. Think of it less like a general highway, more like a specialized digital superhighway, engineered just for the intense demands of trading and complex finance. This design choice is fundamental to its performance.
Okay, so using Cosmos SDK makes it specialized for finance. What does that specialization actually mean in terms of, like, speed and security? How fast are we talking?
Right, that specialization translates directly into, well, lightning speed and instant security. It uses a Tendermint proof-of-stake consensus mechanism. What's really critical is instant transaction finality. Once your trade is confirmed, it's done. Final. Irreversible, immediately, like a digital handshake that's binding on the spot. No waiting around wondering if it'll go through or get reversed. And the numbers. We're talking incredibly fast block times, around 0.6 to 0.65 seconds. And throughput. It can handle upwards of 25,000 transactions per second, TPS. This kind of speed, this instant finality, it genuinely opens up possibilities for financial applications that just wouldn't work on slower chains.
Wow, 25,000 TPS and sub-second finality. That's really impressive. What kinds of things does that speed actually enable? Like, what can you do with that kind of performance that you couldn't before?
It's a total game changer for certain applications. Think about high-frequency trading, where every millisecond counts. Instant finality means a trader knows their order is settled, really settled, immediately. That reduces risk, opens up complex arbitrage strategies that used to only happen on centralized exchanges. Or consider complex derivatives where values change super fast. Being able to settle and reevaluate those contracts almost instantly. That massively improves capital efficiency, reduces risk between parties. It's about providing the engine for a new class of financial products that absolutely demand real-time performance. Stuff that's just not practical on slower networks.
Okay, that makes the speed implications really clear. But what about that front-running problem we talked about earlier, the unfairness? How does Injective specifically stop people from cutting in line?
Ah, yes. That's where one of Injective's most clever, really fundamental features comes in. Frequent batch auctions, or FBA. This is built right into the blockchain itself. It's their core defense against MEV, against front-running. Instead of processing orders one by one, which lets bots see yours and jump ahead, Injective does something different. It gathers all the buy and sell orders submitted within a very short window, usually within a single block. It's like an auction house collecting all the bids for an item before revealing the single price that clears the market for everyone in that batch. Because all orders in that batch are settled at the same single fair price, it becomes technically impossible for a bot to see your order and sneak one in ahead of it to profit. This design directly neutralizes that whole front-running issue.
FBA. Okay. That sounds like a really smart way to level the playing field. Are there any, like, loopholes or situations where maybe it doesn't work perfectly?
That's a fair question. Any system has its design limits, right? FBA is incredibly effective at stopping front-running within a single block. Now, theoretically, could someone try to anticipate large orders across multiple blocks if they had, say, massive resources and visibility? Maybe. But Injective's transparency, combined with those super short batch times and high speed, makes that kind of sophisticated manipulation extremely difficult, and probably not worth the cost for almost everyone. The main goal is creating a fair environment for the vast majority of users, and FBA does that incredibly well.
Got it. And what about fees? That's always a big one in crypto and definitely in traditional finance. How does Injective handle transaction costs?
They tackle fees using advanced gas compression tech. The result, transaction costs are often less than a penny. We're talking fractions of a cent, maybe around 0.0003 sometimes. Seriously, imagine sending money globally, making trades, interacting with complex apps, all for basically nothing. It makes things like frequent trading, microtransactions, even automated strategies just so much more viable.
Less than a penny. Okay. And I think they also have something traders would recognize, right? An order book.
Yes, exactly. Unlike a lot of DXs that use automated market makers, or AMMs, Injective offers a traditional central limit order book, or CLO, just like you'd see on a stock exchange. But here's the key difference. It operates entirely on the blockchain. So you get that familiar trading experience, seeing bids and asks, placing limit orders, but with all the transparency and decentralization benefits. And any app built on Injective can just sort of plug into this on-chain order book, use it as a core building block. Super versatile.
So it feels familiar, like a traditional exchange, but it's decentralized and super cheap.
Okay.
What about developers? If someone wants to build the next big finance app, how easy is it to build on Injective?
They've really focused on making it welcoming for developers. It has multi-VM support. That means it supports different coding environments. Right now, that includes CosmWasm, which uses Rust, and in EVM, which lets Ethereum developers deploy their existing Solidity code with minimal changes. And they're working on INSVM for Solana compatibility, too. This isn't just tech jargon. It's about lowering the barrier, making it easy for developers from various ecosystems, Ethereum, Cosmos, soon maybe Solana, to bring their ideas and code to Injective. It massively widens the potential talent pool.
Okay, multi-VM makes sense. And connecting to other blockchains, how does it talk to the rest of the crypto world?
That's another huge focus, interoperability, connecting everything. Injective uses several different bridges. Think of them like digital tunnels, such as IBC, which is native to Cosmos, but also Peggy, Wormhole, Axelar, Hyperlane. These bridges link Injective to, I think it's over 23 other distinct blockchain networks now. This ensures assets and liquidity can flow smoothly between Injective and places like Ethereum, Solana, Polygon, and many others. Absolutely critical for being a central financial hub.
Right, you need those connections. Okay, so we have this powerful, fair, developer-friendly, connected network. But every Web3 project has a token at its heart. What about INJ? How does the INJ token power this whole ecosystem?
The INJ tokenomics. They're really quite cleverly designed to tie the token's value directly to the network's success. First, you've got staking. Users can lock up their INJ to help secure the network, either running a validator node or delegating their stake to one. And for doing that, they earn rewards. Standard proof-of-stake stuff, but essential. Second, governance. INJ holders get to vote on the future of the protocol. System upgrades, changing parameters, deciding the strategic direction. It puts the community in control.
Okay, staking and governance, pretty standard. But wasn't there something else, something about burning tokens?
Yes. This is where it gets really interesting and, frankly, quite unique. The deflationary burn auction. Here's how it works. A huge chunk, 60% of all the fees generated by all the applications running on Injective, all the trading fees, everything, gets collected each week. This collected pool of fees is then put up for auction. People bid using INJ tokens. The winning INJ bid, it gets burned. Poof, removed from circulation forever. This directly reduces the total supply of INJ over time. And the recent INJ 3.0 update, that's designed to make this burn even more aggressive, even more effective at reducing supply as the network grows. It creates a genuinely deflationary model.
Oh, okay, so the more people use Injective, the more dApps are built, the more trading happens, the more fees are generated, the more INJ gets permanently destroyed, making the remaining tokens potentially scarcer and more valuable. That's a powerful loop.
Exactly. It creates this really tight, self-reinforcing economic flywheel. Network success directly translates into potential value accrual for the token holders through scarcity. And to close that loop, the other 40% of those collected fees, they go directly back to the developers who built the dApps that generated those fees. That creates a really strong ongoing incentive for developers to build cool, useful, successful things on Injective. It fuels the ecosystem growth.
Okay, so behind the scenes, Injective is engineered to be fast, fair, cheap, and has these really interesting tokenomics driving it. But let's bring it back to the listener. What does this all actually mean for me, just a regular person? How would I use this? How does it make my financial life potentially better?
Right, the practical benefits. Well, if you're a trader, even casually, Injective gives you access to high-performance trading that feels like a pro platform, but it's decentralized. You get advanced features like derivatives, margin trading, maybe things you couldn't easily access before. And, crucially, it's low cost. Those near-zero fees make a huge difference. Plus, that fairness aspect, knowing you're not getting front-run, that provides real peace of mind. You get the tools and speed, but with the transparency and control of Web3.
Okay, that makes sense for traders. But what if I'm not a developer or a super active trader? Is there anything in it for me?
Absolutely. Even if you're not coding or trading daily, Injective opens doors. For entrepreneurs, maybe you have an idea for a new financial service. It provides the platform to build its specialized exchanges like Helix, lending protocols like Neptune Finance, automated strategies like Mito, even NFT marketplaces like Talus Protocol have been built there. But something potentially even bigger for everyone is the whole real-world assets or RWA angle. angle. This is about taking traditional assets, stocks, bonds, maybe even fractions of real estate, and bringing them onto the blockchain as tokens, making them easier to trade, more transparent, potentially ownable in smaller pieces. And Injective is already making moves here. Look at the tokenized BlackRock BLDL fund index that launched on the platform recently. That's a huge signal bridging institutional-grade assets into DeFi. It shows they're serious about compliance and attracting traditional finance, which is a big deal in the RWA space.
That RWA connection, bringing real stocks or bonds onto the blockchain via Injective,
Yeah.
that feels really significant, like a proper bridge. And looking further ahead, isn't there some potential with AI too?
Yes. The future potential there is definitely exciting. They have things like the iAgent SDK in development. The vision is for AI agents that could automatically execute really sophisticated financial strategies for you 234/7. Imagine an AI assistant managing investments with incredible speed and precision, all running on Injective's secure and fair infrastructure. So at the end of the day, it offers a pathway, a way for more people to participate in global financial markets without the old gatekeepers, the high costs, the unfair practices. And having a native stablecoin, AUSD, also helps make things smoother within the ecosystem.
Okay, we've covered the impressive vision, the tech, the benefits, but no project is perfect, especially in crypto. We always need to look at the other side. What are the potential risks, the criticisms? What are the things Injective needs to be careful about?
A very necessary reality check. Probably the single biggest elephant in the room is regulatory uncertainty. It's huge. The whole landscape, especially for things like decentralized derivative, is still very much a gray area legally in many places. Regulators, particularly in the US, like the SEC, they're still figuring out how to classify these things, how to govern them. There's a definite risk that the INJ token itself could be labeled a security. That would bring a whole host of strict legal and operational requirements. Now, Injective isn't just sitting back. They are actively engaging with regulators, trying to build within clear frameworks where possible. That application for a staked INJ ETF in the US, that's a really key thing to watch. Its outcome could set a major precedent.
Right, regulation is always the big unknown. Even if the tech is solid, the rules can change everything. What else? Competition?
Definitely. Intense competition. The layer one blockchain space and DeFi in general, it's incredibly crowded, super innovative. Injective is up against other fast chains like Solana and Sane Network, plus dedicated derivative platforms like DYDX. They absolutely need to keep innovating, keep attracting developers and users just to stay ahead. They can't afford to rest on their laurels.
Makes sense. And like any crypto asset.
Yep, market volatility. INJ, like pretty much all cryptos, can see big price swings. If we hit a prolonged bear market, trading volumes across the network could drop significantly. And if trading volume drops, fewer fees are generated. That means less INJ gets burned through that auction mechanism we talked about. So a market downturn could directly impact the effectiveness of its deflationary model.
And technically speaking, any potential weak spots in the architecture itself.
Well, complexity always introduces potential risks. Supporting multiple virtual machines, relying on all those different cross-chain bridges, Peggy, Wormhole, Axelar, etc., it adds layers. History has shown, unfortunately, that bridges can be targets for hackers. So the security of those connections is absolutely paramount. Requires constant vigilance, auditing, and of course, like any platform using smart contracts, there's always the risk of undiscovered vulnerabilities in the code. Rigorous auditing helps, but it's an ongoing concern in DeFi. Oh, and one last point on the tokenomics. While the burn is powerful, it is directly dependent on network activity. If activity slows for any reason, the burn rate slows too, impacting that scarcity aspect.
Okay, that gives us a balanced picture. So wrapping up this deep dive on Injective, if you had to distill it down for our listener, what's a 1 or 2 sentence takeaway? The essence of it.
I'd say. Injective is a super fast, highly specialized blockchain built from the ground up specifically for decentralized finance. Its main goal is creating a fairer, more open global financial system using unique tech like MEV-resistant trading, incredibly low fees, and a really strong deflationary token, and maybe add. It functions as this core engine for on-chain finance, not just connecting different blockchains, but also actively bridging to traditional assets, making it a powerful platform for developers, traders, and even institutions.
This is a great point to quickly pause and remind our listeners of something.
That's right. If you're enjoying how we break down these complex projects into simple pieces and want more reviews just like this, make sure you subscribe to our channel, CryptoBox. We do all the complex research, so you don't have to.
That really was quite the deep dive. Thanks for walking us through all the layers of Injective. It's honestly fascinating how projects like this are trying to fix some really deep-rooted problems in finance, both old and new.
My pleasure. And it really is clear they're not just building, another exchange. They're trying to lay the plumbing, the fundamental infrastructure for potentially a whole new way of doing finance globally.
Absolutely. So what does this all mean for you listening right now? The provocative thought I want to leave you with is this. If platforms like Injective really can make sophisticated finance truly accessible, truly fair for everyone, everywhere, are we going to see a future, maybe sooner than we think, where your local bank branch is just another app running on a global decentralized marketplace, or maybe doesn't exist at all?
Indeed. And it raises that important follow-up question for you. In a world where finance becomes increasingly decentralized, increasingly interoperable, maybe even automated, how much control do you really want over your own financial future? And are you prepared for the kind of fundamental shifts this technology might bring about?
Definitely something to chew on. Thanks again for joining us for this deep dive. Until next time, stay curious.